Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we're talking about Palantir's PLTR stock and how Palantir recently signed a strategic agreement with another huge company, which is really going to help out both the company as well as the stock price. We're going to be going over the latest news updates and price targets for Palantir Technologies, and then after that, we have huge news for NEO stock because recently a short report was recently released for NEO stock, which could cause the NIO stock to absolutely crash. So we're going to be going over the news and updates from this alleged short report to determine if it's true or not, or if I agree or disagree. But regardless, this is going to impact the NIO stock price. And of course, we're going to be going over the latest news updates and price targets for NEO stock as well. For more videos like this one, remember to go and smash that like button right now. Comment your thoughts down below about Palantir Technologies' new strategic agreement and the short seller report that was recently released about NEO stock. Remember to go and subscribe if you are new, and without further ado, let's jump right into today's stories. So if you didn't know, Palantir Technologies is a big data and analytics company that helps management and organizations make decisions based off of data analysis, and they serve both commercial clients as well as government enterprises. Right now, the PLTR stock is trading for around $9.30. However, very bearish investors say that the company is going to fall down to around $6 per share, while bullish investors think that the company could be worth around $16 over the next 12 months. However, the average investor and analyst thinks that the company is going to be worth around $10.92 by the end of the year. And overall, we have a hold rating for the PLTR stock at its current price point. However, they recently signed a strategic agreement with Guidehouse, who is a global leading consulting services company that serves both commercial clients as well as the government. This partnership will combine Guidehouse's next generation consulting services with Palantir Technologies' Foundry platform, which is used for their commercial clients. And although Guidehouse does have multiple government clients the same as Palantir, they are at first mainly going to focus over on their commercial clients. So if you didn't know, Guidehouse is actually the third largest consulting agency for the federal government, and they help to solve unique business problems and technology challenges for those government agencies. So their services are very valuable for the government. And under this strategic agreement, Guidehouse will actually start implementing solutions based off of Palantir's Foundry platform. So this is a situation where these companies are helping each other out. I'm going to scratch your back if you scratch my back. And together they're going to be able to deliver very specific solutions for various problems that these organizations could end up entering into. The Guidehouse defense segment leader actually had to say this about the strategic agreement with Palantir Technologies by saying that the Guidehouse-Palantir partnership is a powerful combination. Palantir's extensive track record in solving complex challenges, coupled with our deep mission understanding and robust digital expertise, will enable clients to accelerate their digital transformation journeys, end quote. Now, another leader from Guidehouse, who is the leader for their advanced solutions segment, actually added on to that statement by saying this strategic alliance brings together deep skills in business and technology strategy, product ideation, technology development and deployment, and organizational change management to help support clients make better and more impactful business decisions. Lastly, we actually had the head of the USG growth at Palantir Technologies respond to these comments by Guidehouse by saying, with deep functional knowledge in data science and data engineering, Guidehouse is a valuable partner as we extend our support for the US government. He goes on to say, together, we will be able to provide robust offerings to solve data challenges for a variety of missions and place our clients on the best path for success, end quote. So overall, I would say this is absolutely phenomenal. This is going to help both their commercial clients as well as their government clients, and together I think this is a phenomenal pairing. Now, moving right along, we're going to address what a few critics say about Palantir Technologies in regards to their heavy reliance on government contracts. However, Palantir Technologies has recently overcome this criticism, according to this Motley Fool article, by expanding their commercial clients, to where now some critics are saying the exact opposite. They're saying that, oh, but what if Palantir Technologies becomes too reliant on their commercial clients? And honestly, I already predicted that over a year ago, saying that eventually Palantir Technologies will bring in more revenue from their commercial segment than they will from their government business. because as of late, Palantir's revenue growth by segment clearly shows that they are rapidly increasing their commercial efforts. For instance, if you look on screen right here, we can see for quarter one of 2021, their government segment grew by around 76% and their commercial sector grew by around 19% in terms of their revenue growth rate. But if we look at quarter two, quarter three, quarter four, and quarter one of 2022, we can see that the trend has actually reversed as of quarter three of 2021, because in quarter four of 2021, clearly their commercial clients grew in revenue more than their government clients, and that trend decided to continue on in the first quarter of 2022. So they are rapidly scaling their commercial clients, which is a huge backhand to Palantir's critics. They have been rapidly growing their US commercial clients and revenues very impressively, and this is mainly due to their aggressive investing in their sales and marketing departments. But despite this growth, the market environment is still very bearish for technology growth companies such as Palantir Technologies. Even though Palantir is promising future growth and future profit, many investors are taking more of a bearish approach to the market, and they want value stocks right now, which is why technology stocks and growth companies have been hit very hard due to fears of a market crash, recessions, high inflation, and rising interest rates. However, the CEO of Palantir Technologies, which is Alex Karp, said that our business is a rare amalgam from an investing perspective that blends aspects of both value and growth. Now, from my perspective, I view Palantir more as a growth stock because they are trading at a future multiple, and even Alex Karp has said multiple times in his interviews that he is more focused on the long road ahead and not what the company is going to achieve in the next quarter or two or even in the next year or two. So clearly this is going to be a very long-term play, which is why the company is currently set to become profitable at the end of 2025. However, overall, similar to a value company, they have a very healthy balance sheet and they are consistently growing their revenues, which allows Palantir to trade at a higher valuation, making it more of a growth stock in the end. But now let's jump over to NIO's NIO stock, and NIO is an electric vehicle company, and right now the NIO stock trades for around $22.35. However, very bearish investors think that the company is at least worth $25, which is actually good because it means that the company could actually appreciate in stock price according to the most bearish investors. However, on the bullish positive side, investors think that the company could surge all the way up to around $67 per share, but more moderate investors would say that the company could be worth around $38 over the next 12 months. But what about the short report that came out recently by Grizzly Research, which is causing the NIO stock price to pull back right now? And they say that NIO has an audacious scheme happening right now in terms of their revenues and their net income. So Wall Street is paying attention to this. So basically, the story is that Wuhan Wineng, which acts as NIO's battery asset management provider, is fudging the numbers that NIO gains from this particular segment. So Grizzly Research says that Wineng has fudged the numbers and generated billions of dollars worth of revenue for NIO through an accounting game. And this is really bad news because we've actually seen this happen multiple times in foreign companies that are over in China, because NIO is a Chinese electric vehicle company after all. Grizzly Research believes that NIO has actually inflated its revenues and net income by around 10% and 95% respectively, just to meet Wall Street's expectations. So as Wineng collects NIO's monthly subscription revenues, the story is that they are reporting more revenue than they are actually bringing in. And I'm going to quote directly from this article, which says that Grizzly emphasizes that Wineng is incorrectly recognizing battery revenue. The firm believes that instead of recognizing revenue over the course of a subscription's duration, Wineng recognizes revenue right away. As a result, NIO recognizes roughly 7 years of revenue immediately. So to put that into perspective, basically their battery subscription service, give or take, lasts 7 years. And instead of Wineng recording that revenue on a monthly basis when people pay on their subscription, they are counting on the entire lifetime of that subscription for 7 years worth of revenue from that one subscription, and they're adding that to NIO's revenues. And again, we don't know if this is actually happening as of right now. This is just the allegation from Grizzly Research, because some of these short seller reports are true and sometimes they themselves are lies just to cause panic in a stock stock so short sellers can further short the company. Right now, I don't have a specific opinion because I have seen this done in Chinese companies before, which absolutely ruined various stocks. However, the article goes on to say that the firm, referring to Grizzly Research, also points out conflicts of interest between Wineng and NIO. Two of the former's top executives also act as NIO's vice president and battery operating executive manager. Meanwhile, NIO president William Li has been involved with quote-unquote past ventures that have quote-unquote seen their stocks collapse and been taken private at a fraction of their peak valuations, end quote. So this is really not looking good for NIO. However, we're going to have to dive deeper into this particular article and short seller report to determine if these allegations are 100% true or if they just want to cause a panic for the stock. As of right now, I am inclined to slightly believe Grizzly here, just because Chinese companies have been known to fudge their numbers and report false revenues and net income, and on top of that, William Li has had some shady business done in the past, but as of right now, who really knows? We're going to have to wait for more information to come out about this particular story, but I would love to hear your thoughts down below and what this would mean for NIO stock. Well, if this ends up proving true, the NIO stock is going to absolutely plummet down to just a couple dollars. Also, even if this isn't true, this will cause some panic in the NIO stock, which is either going to present us with a good selling opportunity right now before the stock drops, or it's going to lower the stock price low enough to buy back into this company if eventually Grizzly Research is proven false. However, unrelated to this news, there has been an analyst that has downgraded their price targets for NIO stock and Tesla. And although he has reiterated his buy rating for both companies, his new NIO stock price target is $48 per share, which he downgraded from $55, and his new TSLA Tesla stock price target was slashed from $1,300 down to $1,150. Now, some good news for NIO specifically is that they are in the middle of a global rollout for their various vehicles in more European markets later this year, so at least they have that catalyst going for them. But I would love to hear your thoughts down below surrounding Palantir Technologies, Strategic Alliance, and NIO's short seller report, and what do you think of these price downgrades for NIO as well as Tesla stock? And with that being said, I will see you in the next YT video.